Good afternoon. Welcome to OptionsTender. It's Wednesday, September 10th, 2025. So we're taking a look at SPX on multiple time frames. We'll look at the VIX, and I want to show you ES as well. MJ and MSAUS, they're still doing their thing. It seems to be setting up, so we're not going to check that out. Nothing's changed there. But I want to show you first ES. Just super interesting in the Discord. We've been looking at different forks, and I wanted to show you the Pitchfork on ES. Thank you, Ralph Kaz, for introducing forks. I have not used them before, and now I am addicted. So matching that along with cycles, we'll keep that for members, though. By the way, we're doing this intraday about almost 3 p.m. Eastern Standard Time. If you want to get these videos intraday, consider becoming a YouTube member. It's a supporter membership for 99 cents a month, and it comes with the Discord and trade alerts, and then we go a lot more in depth with the $4.99 membership. Okay, I think there's great value in it. Not one of those people that will charge hundreds and hundreds of dollars a month. Okay, so here's the Pitchfork, anchored here at the low from the sell-off from 2022, and this significant sell-off here, the correction, and now we have up here, we're rejecting off of this. Now, it's a little bit different. I usually do this in analog, so I can tell already it's a little different, but it's good enough. It's right at that, I believe that's the 50% line there. Could be the, let me look. At the 25% line there. Okay. Rejecting off of there, making a new high, and then we'll continue on with the regular analysis, but just a really good spot that price action is rejecting off of. And just to show you, let's go to analog here, or linear, and you see how good this Pitchfork represents resistance here, but it kept in this channel this whole time. Yeah, there's some volatility, comes through, held on to the midline while making new highs here, and then the correction really respecting these lines, and then failed off of it. And there's where you had volatility. You had the bounce off of the perfect 0% line of the fork and dropped once again to the negative 100% precisely on there, and regained each of these levels and back tested before heading higher. It's pretty amazing in my mind. So let's change back. Use the log scale. And start off with SPX on the daily time frame. So we added our new indicator here. Our trend remains up. Of course, we're buying into it, but we're also buying into resistance, okay? Another failed breakout here. You'll see that on the traditional look. And, this is forming a diagonal. Can it break to the upside? Absolutely. Did it try? Yes. Did it break down? Yes, you have a fake break in hand, but we're still green. There's no sell signal. We're not underneath the 20 exponential moving average. So we're kind of in limbo. Just, I would call it chop, even though it's slightly rising and NDX is pretty much going sideways. It's still just chop. If you're getting in here and scalping, good for you. Awesome. Here's the moving averages pushing up. The trend is still up, which is the 20 moving average, and our 8 MA is moving up. Now, if we layer on the traditional technical analysis, you see that we're forming this wedge. We held onto that wedge after a fake break to the downside. Now, I consider this more of a channel because we're going a little bit more sideways there. We're still going to respect that there's a wedge bottom here. And that's where price action held here with the 8 EMA yesterday and gapped up today with PPI. Now, very often, PPI will have one movement and CPI will have the opposite. So it doesn't always happen that way, but every time that this time of month comes around, we want to mention that today with PPI gapping up tomorrow with CPI, it could move lower. So each of these highs have failed, but technically not a failed breakout until you try to break above, which right here was a failed breakout. Right here is a failed breakout, and we'll see what happens tomorrow. Clone Oscillator, still neutral to heading lower here with the new divergence today. And that was so obvious in, price action with the large cap tech stocks, NVIDIA, Tesla, holding things up, and everything else is starting to fail. So you can just see the breadth is weakening with the market. All right, same thing as usual here. Now it wasn't perfect. So I moved this earlier because we were talking in the Discord about this triangle, getting real tight in here, and it looks like it's starting to break above. Of course, you have to respect that, but on the same note, it's still a lower high, and so I want to, draw this just a little bit different and still represent that it's a tightening phase here. Now, if we start making a new high over here, then it's still a lower high from the top. You still have divergences, but obviously you have the market moving a little bit higher with a little bit more strength. Now we're still in oversold territory. I know it doesn't seem like it, but we're back there with divergence and oversold or overbought territory. And then we have divergence here on the slow stoke, and we're getting that crossover. You see price action's trying to cross over here and get the sell signal, and the 97 is underneath the 80. DMARC continuing to count up there. I meant to move that arrow also, by the way. And the reason why I want to move the arrow from here is in the RSI, it made a new high right here. So we still have that 4 peak here. This one doesn't count towards it on the RSI since the new high was made. Okay, so we have a 5 count so far, a 5-7. No setup here yet. Let's go to SPY. On the SPY, we can check out the money flow index, and then I'll put on a board here the divergences. We're catching a lot of turns here. Really good indicator on that. Now, price action here is still making a lower high. Actually, I'll take that one out because it seems to have more of a trend line here. So we're making these 3 peaks, but if you show any strength tomorrow, we could see an overbought situation again, which would be a new high here, but that's okay. I mean, that would, it doesn't have to have a divergence to get a turn. All right, so far all divergences here on the money flow index. And where do we go from here? Bollinger Band. So with the Bollinger Band, we're back in the top of the band here. This is a setup. This is a sell setup. So you see how we made a new high from this one, I believe. We'll have to see how the market closes because this is at 71.95, and we're just below it. So, honestly, we still have a lower high, so I can put another arrow in there. But we're back at the Bollinger Band. We're reversing off of it with an overbought situation. That is a sell setup in itself. Volume, we talked about that yesterday. Elliott Oscillator. So again, we wanted to, if you're bullish and that bar is still lower high, but you want to see a new high. You want to see this start to rise. Okay. As of this point, as of today, again, another divergent high. How long can this last? We shall see. Let's go to VIX. And we'll just put on the moving averages. So the VIX has been showing some strength, even though it gapped down today. It's very similar, in my opinion, to when it gaps up and then allows room to go down, kind of a gap and crap, for the market to go up. Now, in this case, it gapped down and now is closing the gap upward. and allowing the market to pull back a little bit. So you had green on the VIX, you had green in the market. It's not a very typical thing. Gold being green, all of it being green. That's going to change. Now, with TNX, our treasuries, we're breaking the lows here. We're possible trend line there. Now, I know you can draw another one from this low that's bigger, and we do have that on the weekly time frame, but we're starting to drop. The momentum is to the downside. The trend is to the downside. This is not good for, obviously, rates are good for overall for interest rates and stimulating the economy. But what this means is that the economy is weakening, that we're going into a recession. And then as this drops later on, a year, 2 years from now, it will really start to stimulate the market, and the market will head back up again. Now, we were talking about this equilibrium that was happening here. If we broke out higher, that would be bad. If we broke out lower, that'd be bad. But they're bad in different ways. Okay, this is the sweet spot here in the middle. If it goes higher, stagflation. If it goes lower, recession. All right. I wasn't going to go through that, but I think that is necessary. And what else do we want to show? Let's go back to the 65 on SPY. Okay, here's our traditional look here. And, I said we were in the zone for a sell-off, and I didn't think we'd be up here for very long. I think this would be the top for a long time. This is the zone that I'm looking at right here. Okay, price is above it. Yes, so if it breaks back down from here, nothing's really changed, but we are, a couple points above it here. This structure, if it's an ending diagonal, which I still think it is, we have to count it just a little bit different. And, I mentioned that we could make a new high here because of this. I'll show you exactly why. Now, tomorrow, by the way, if we have a negative day, our options expected move is all the way down here to 638. We don't have to get all the way down there. When you're in a topping position, you could end up closing right at the where you started the week. But if you are bullish, obviously, options expected move is 656 up here, a little bit higher. I'm not in that scenario, but it keeps drifting higher anyway, while tech moves sideways. So looking at this wave count, so we were looking at it as being 1, 2, 3, 4, and 5, and that would have worked out perfect. Then we got this new high right here. So let's update these. And this was invalid. All right. If this is still 1, 2, 3, 4, and then we have a 3 wave for 5, so be it. That works out. But this is how we changed it. And then I said, all right, well, let me check. Wave 3 can't be the shortest. And when this peaked up here and gapped up, that was a longer wave than this wave 3. And so wave 3 cannot be the shortest, even in an ending diagonal. And so I said, probably are capable of making a new high there. So even if you have your 1, 2, and then your wave 3 up here, then you have your 4 and 5, a 3-wave move for a 5. You can count this in multiple ways, but this is what I would do just so your wave 3 is boom, 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 and you have your 4 there. So it doesn't matter if you still go 1, 2 down here, and you end up with 3 there, then that's not the shortest. So it's all speculative. You can use the Elliott oscillator in this case, where this was the biggest move. I think now that this is all one wave, a 3-wave move for a 1, 3-wave move for a 2, and you had your extension in wave 1. Okay, so that's what the Elliott oscillator tells you there, and then your momentum starts to weaken. All right, so that's how we do that in the members videos. We use that setup quite often, and so now you have an ABC. That's, look, 1, 2, 3, 4, 5 wave move so it's a zigzag, up into a 3, and then you had your wave 4 correction and wave 5. All right, so I do think, once again, this is complete. I know I've said that over and over, but it's all speculative when it comes to structure. But all the conditions, the whole point is all the conditions have been met at this point back here. All right, and that could have been the top, but instead it became an extension to where instead of a wave 5 right here, instead of that wave 5 being done, and this one, you know, I'll set these aside. This ended up being an extension where you had 2, 3, 4, and 5 up here to be wave 5 of 5 of 5. And that could be the end, or that could be an A wave. If you look at the weekend video, you know what I'm talking about. This could be the finish of an A, and then you go much, much higher to 7,000 or so. That would be our alternate scenario, but I think that's unlikely. So still fading today. Not very bullish. Let's see where we should go. Oh, let's do the traditional technical analysis. And again, if you look at the trend is up. Okay, it's starting to fade, and we have all those conditions in the daily time frame, but the trend is still up. Here's your moving averages. Messing with the testing that 8 EMA right now, the 20. So like I said, trend is up, momentum still up, but we're at resistance. There we go. So made a new high from here, and obviously still a lower high over here. So that extends. All right, you had your new high right here, new high right there. Is that it? We're starting to cool off a bit, and we had that sell signal. We were looking at that in the morning. And so that's why we're getting our fade here. And we're looking for the crossover to happen in the MACD. It hasn't happened yet. But the slow soak gave us a little bit of a sell here. And then does it start to go higher with price going higher? That's possible if we don't get that bearish cross here. DMARC. So we got a 9 count. You got that 9 count sell signal here. And now we're starting a count to the downside. We'll see where that resolves. Money flow index. There's your negative divergence here in the near term. And so that's good to see for a reversal, that move there. All right, that's distribution. It's your Bollinger Band. We had this sell signal on the gap up today into the Bollinger Band top with these overbought conditions. Volume shelf, we looked at that yesterday. Elliott oscillator. In this very near term, do we get one more high with the divergent high? That's what we always continue to look for in the very, very near term. Now, the divergences played out are gathered all along here, but we need to pay attention in the very near term. It doesn't have to, but that gives us new clues that a correction is going to happen, just like this one. And then we got our correction, just like this one, and we got our correction. So let's see what happens in the near term. Okay, that's it, you guys. Thanks for watching here. Don't forget to like and subscribe, and we'll see you in the next video. Have a wonderful day.